All right, let's just start off. What's your word of the day? How do you see today shaping up as we look at the last day of Q3?
So my word of the day is trend, and it really is beyond today, Frank. There's an old saying on Wall Street is don't fight the trend and don't fight the Fed. Well, today we have global markets all making 52-week highs over the last week or so. When you think about the S&P, developed international markets, emerging markets, and then don't fight the Fed is the old saying. Well, now that we have don't fight the Fed, don't fight China, and don't fight the European Central Bank as well.
All right, so one more time, what's the trend that investors should be really focused on for today? And I know you said it's beyond, but what's the trend? You're saying it's the central bank cutting cycle?
I think the underlying trend is one that's moving up, right? Okay. The trend that we're seeing in the overall markets is it's moving high. I think we'll see some volatility into the election, which we tend to see a spike in the VIX in October, but the underlying trend for the market remains higher, and that's confirmed by these new highs that we're seeing globally and with a lot of breadth.
All right. So you have a new note out. You kind of hit on some of the things that you're finding attractive. You're finding U.S. large cap as more attractive. Emerging markets is less attractive. U.S. Treasuries is more attractive. I want to go to the emerging markets part. That includes China. We've seen a big rally when it comes to China. So are you saying that you're not seeing a lot of opportunity in China beyond the stimulus that we've already seen?
Well, I think time frames matter, Frank. I think in the short term, I mean, obviously we've seen all the stimulus. The markets had a big move. If you look at China itself, it's still down about 40% from where we were a few years ago. So on a short-term basis, I feel like this has more upside just because everyone was not positioned there. You had huge short interest, and central banks hit this at the right timing. So there's likely more, if you're more of a trader over the next month or two, I think there's more upside there. Ultimately, we still think there's a better market longer term is still the U.S., where corporate profits are much stronger. Chinese profits have been flat for about 10 years. But again, you have a stimulus and you have a bit of a short-term put from the Chinese government that's going to help emerging markets overall.
You're also seeing U.S. Treasuries is more attractive. Which end of the curve are you looking at for opportunities?
Yeah, well, I think more in the short term right now. Moving from cash to say 2 to 5 years is probably what we think there's value. On the 10-year, we were more bullish on the 10-year Treasury when it was closer to 460. Now it's around 375. You have the stimulus coming in, so we would be looking to extend duration on a bounce, probably above 4%, but not here. And then outside of that, Frank, I heard some of your earlier guests like Dan Ives was on. We still like tech. We upgraded tech during that August sell-off. It's still double digits from off the recent highs, but the earning trends are still very strong, and we're nowhere in our work anywhere close to bubble territory.